Hey, my name's James Nicholson and welcome to this video. In this video, we're going to talk about the UK housing market, and we're going to talk about potentially house prices are now looking at a 15% drop. So what's driving this? Well, before we jump into that, welcome to my channel. And in this channel, I want to invite you on my investment journey. I'm 23 years. I've been property investing. I'm building my portfolio out this year, and I want to invite you along on that journey with me. Now, more interestingly for you, I'm building a portfolio for my two girls. We've got Georgia, who's 21. We've just bought two properties together. We've done a buy, refurb, refinance, rent up in Doncaster, basically a refurbishment product. You can see how that all went on this channel. And we've just bought a flat in the southeast as well. So we're also building a portfolio for my little baby Amelie. So do join us on this journey together and find out the good, the bad, and everything in between on property investing. So how can you do that? You take that finger of power, you spin it round, you smash that subscribe button over there. Go on, guys, do it right now. Smash the subscribe button and hit the bell notification. Now, what's going on with the UK house prices and the UK market? Like, a lot of stuff is happening and we must be paying attention to it. And so what is happening at the moment is the UK economy is in a perilous place. Let's not beat around the bush here. We kind of knew that this was going to happen. We had a pandemic that really hit everyone hard for 2 years. And during that time, the government had to spend a ton of money just keeping everything running. And so to create that money, they printed money. Now, that has devalued the pound. That has caused runaway inflation. In fact, this is happening all around the world at the moment. And because of that, last Friday, the Bank of England, sorry, not the Bank of England, the government ran a mini budget. And in that mini budget, they talked about dropping taxes for higher rate earners, dropping stamp duty, and so it's a lot cheaper now, and various other things. Now, normal times, that would be a good thing. But at the moment, we're in a difficult scenario, and the markets just reacted terribly to this. In fact, the value of the British pound went so low. In fact, it was the lowest ever on Monday morning that it's ever been in history. It's very, very close to being $1 to £1, which is not really good, is it? And so the Bank of England had to step in, and they did a statement, and they said, basically, we will do whatever it takes to get inflation and the currency market under control. And they implied that they will be raising rates as far as needed. Now, prior to that, in the last few months, we've been looking at rates going from almost zero, and they were looking at peaking at 1.5%. Then a few weeks later, they thought the outlook was not so good, and the interest rates would peak at 4.5%, which is a hell of a lot more. And now what's happened is they're looking at interest rates that could peak at 6% to 6.25% by next year. Now, to get to 6% from 2.25% that we're on, they're going to have some very, very big increases. And the next increase is expected to be one of the biggest ever. The next time the Bank of England meets is in November. They haven't ruled out doing this prior and having an emergency meeting if everything still doesn't stabilise. And they're expected to raise the interest rates in November by 2%. And that would mean the interest rates this December, November even, would be 4.25%. Now, you won't get that rate from your bank. You'll be paying 2 or 3% on top of that. So you could be looking already at like a 7% interest rate. A lot of people have been very comfortable on 2% rates for the last few years. And suddenly to jump to 7%, particularly if you're on interest only, is going to be a big, big difference. So what's happened? Well, what's happened since is mortgage companies are freaking out because they need certainty. They need to be able to predict what the interest rates are because it takes a few months to actually get a deal to completion. I have a deal going through Virgin Money at the moment. We're at 15 weeks on a simple remortgage because they're so busy at the moment. And that is where the frustration lies here. And so what we're trying to do is get some certainty in the market. And so what's happened is all the mortgage lenders have pulled their deals at the moment. So it's very hard. There's very few lenders out there today that you can go and get a remortgage with. You can't go with NatWest, you can't go with Santander, you can't go with Halifax. All the big lenders that you'd normally go with, they just don't have deals available to you at the moment. So what that means is that there is going to be a temporary stop in new sales, isn't there? Unless there's cash buyers, of course, they can still buy. But for a period of time, if you've got a house sitting on the market for sale today, how are you going to get that sold if the buyer can't get a mortgage for now, right? For now. Now, what will happen, of course, is this will all get figured out. The Bank of England will get more certainty to the mortgage companies, and then the mortgage companies will probably revise their deals upwards. They're already talking about, even though the interest rate is not at this level today, they're already revising their deals and they're putting their rates up that they offer, presuming this is where we're going to get to, right? So once, maybe next week, when they start offering deals again, they're going to be not as good as they were before. Now, what also will happen is they're going to get flooded with applications because a lot of people just want to fix the deal before it gets up to the top rate, which we're expecting of 6.25%. So that is meaning that there's a potential for so much work going through these companies that it's going to take a long time to get a mortgage for sure. Now, what will happen is some people will want to sell their house now before the rates hit this much because they know their buyers can't afford to pay the price that they want. So what they will do is start being less picky with offers, and they will potentially reduce the price. Now, what they're predicting, some analysts are predicting, and this isn't necessarily going to be true, but they're predicting that the market will drop now by 15%, right? 15%. And so if the market drops by 15%, then obviously people will be getting less for their property sale. And that is one of the things that in the UK drives our economy is house prices. Now, what some people will do is just take their property off the market. They'll say, you know what, I'm not selling at 15% down. I'll wait till the market recovers. So that's going to reduce the transactions in the market for sure. There's definitely going to be less transactions, and that's going to hit the economy and potentially push us into a bigger recession. We're going to go into a recession, I'm pretty certain of that. Even the Bank of England saying we're probably in one already. And so there'll be less transactions. Estate agents will suffer from that. Solicitors will suffer from that. It's going to be a very, very difficult time. But investors, this is where people make big money, because you will find people that will be able to sell your property at a price that you can afford, and you will get some very, very good deals in the next few years. I'm certain of that. You see, what's happened recently in the last few years is auctions have had so many people flush with cash because maybe they've made money on the furlough scheme. They haven't been on holiday for a few years. And auction sales, some of the achieved prices have been the same as if it went through an estate agent, right? And they've got that fast sale. And so auctions haven't been that cheap. But imagine if I asked to look at an auction, what do you think an auction is going to be like in December 2022 or January 2023? You see, there's going to be less people that can get finance. Now, when you buy from an auction, generally you need cash to buy from that auction, or you need something called a bridging loan. However, if you can't get it onto a mortgage afterwards because there's not mortgages out there, the lenders have pulled the deals, then there's going to be less people bidding in auctions, and so the prices are going to drop. So you might end up with a high interest rate here, could be 9%, but the deals will stack up to whatever that interest rate is, right? It's not going to be the death of buy to let. What will happen is if a house was selling for 100 grand before an auction, it might now sell for 70. That means that you need a smaller deposit, but your interest rate might be more, but the rent won't have changed, right? I don't think the rents are going to massively change. And so there's going to be opportunities, whatever rate you buy at, whether it's 2%, 10%, 15%, there are still going to be deals out there. And that's what you need to look at. Now, also when you're looking at deals, you need to be looking at deals where you can add value. So we just bought in Doncaster for £60,000. We refurbed for £12,000, meaning we were £72,000 in. We were £3,000 in for the legals and stuff like that. So we were around £75,000 down, right? We refinanced that property. We got it valued at 100, which means we pulled all of our money out, and we've created 25% equity and £25,000 in equity. It's quite good, that property, because 100 grand's easy to understand the numbers, right? So if the market drops 15% on that house in Doncaster, then we're okay, because we've still got that equity in there. It will reduce down to being worth £85,000, but we've only put 75 in, which we've had our money back now. So we're still going to have £10,000 in equity in there. And so that gives me confidence that you can still do deals in this market. You can add value. You can do high cash flow strategies like serviced accommodation or HMOs, right? And so now if you're watching my channel and you're watching and you're thinking, should I be investing now? Yes, because today the interest rates are 2.25% as a base rate. Stop getting your head around that it's 6%. Get a deal secured at 2.25%. There are still lenders out there doing this, and fix it for 5 years, because in 5 years, the rates will have come back down. Life will be a lot more normal, and this will all be blown over and forgotten about by then. And if it hasn't, you'll have achieved more rent, but you'll have still earned cash flow for 5 years, which is a good thing. Let me know your thoughts on all of this. What do you think is going to happen with the market? I agree it's totally uncertain. I agree that none of us have a crystal ball for sure. Do comment below. Do like the video, guys, and come and join us in London. We're going to be running a live event. What a great time to get some advice. So how you can join us is in the description is a link. Put your details in there. As soon as tickets are out, we'll email you the details and you'll grab a ticket before they even go on for people to grab. That's it from me. Do check out all my other videos. If you want to see how we bought auction, I made a video on that. If you want to see some refurbs, we've done some stuff on that. And go and check out this video right here. Thanks for watching, guys. Bye for now.